Did you know mutual funds weren't always part of the Indian financial market? In fact, the concept of mutual funds was quite foreign to many investors in India until the mid-20th century. Before their introduction, the Indian financial landscape was quite different from what we see today. Their introduction had a purpose, a very specific one at that. The Indian government and financial institutions recognized the need to create a more inclusive and accessible investment environment for the general public. And here's the story behind it. The journey of mutual funds in India began with a vision to democratize investment opportunities. The idea was to allow even the smallest investors to participate in the wealth creation process, which was previously dominated by a select few. Mutual funds were introduced in the Indian market as a means to bridge the gap between the common man and the complex world of stock markets. India to make investing easier and more accessible to the average person. The goal was to simplify the investment process and provide a safer avenue for people to grow their savings. And safer for everyone. This was particularly important in a country like India, where financial literacy was not widespread, and many people were wary of investing in the stock market due to its perceived risks. It started in 1963, a pivotal year in the history of Indian finance, with the Unit Trust of India, or UTI, which was the first mutual fund established in the country. UTI was backed by the government, which provided a sense of security and trust among the public. The government's involvement was crucial in gaining the confidence of potential investors. At that time, direct stock market investment was risky and not well understood. The stock market was seen as a playground for the wealthy and well-informed, leaving the average person feeling excluded and intimidated. Investment was risky and not well understood. Many people had heard stories of market crashes and financial losses, which only added to their apprehension. Mutual funds solved this by pooling resources from multiple investors, money, and letting experts manage these funds. This approach allowed for professional management of investments, which was a game changer for many investments for the public. This innovation democratized wealth creation, giving small investors access to professional expertise and a diversified portfolio. By spreading investments across various assets, mutual funds reduced the risk for individual investors, and a diversified portfolio. Over the years, mutual funds have evolved and adapted to the changing financial landscape, offering a wide range of options to suit different investment needs and goals. Mutual funds have come a long way since their inception. They have grown in popularity and have become a cornerstone of the Indian financial ecosystem, and are now the backbone of India's financial ecosystem. Today, millions of Indians invest in mutual funds, benefiting from the expertise of fund managers and the potential for higher returns. Want to know how they can benefit you? Whether you're a seasoned investor or just starting out, mutual funds offer a range of options to help you achieve your financial goals. Hit that subscribe button for more fascinating stories and smart investment tips. Let's grow wealth together. Stay tuned for more insights into the world of finance and investing.